Hello and welcome to 2018. I'm David Presson, Director of Investments for Wealth Management in St. Louis. 2017 was a very interesting year. We started the year with a new president being sworn into office in January, and we ended the year with comprehensive tax reform. The Federal Reserve raised interest rates 3 times last year, and we had quite a bit of drama out of Washington. Yet despite all this uncertainty, it turned out to be a very good year for the global stock markets. If we look around the world, every major stock index was up. Led by international indexes, we had the emerging market index, which was the strongest, up 37.8%. Emerging markets would include such countries as Brazil, India, China, and Russia. Next was international small cap, up 33.5%. Next was international developed, which would be areas like Western Europe, Australia, and Japan. That was up 25.6%. Here in the U.S., the S&P 500 was up 21.8%, and U.S. small caps are up 14.7%. This was the first time in 5 years international markets did better than the U.S. On the bond side, bonds were still up. Interest rates were flattish for the year. We had the 10-year government bond yield in the year at 241, which started the year at 245. The Barclays Ag Index was up 3.5%, and the high yield index was up 7.5%. The S&P 500 has now been up 14 out of the last 15 years, and last year's gain turned out to be the strongest since 2013. And we're off to another strong start so far this year. As I tape this, we have about 1 week of trading data behind us, and last week the S&P 500 was up 2.6%, which by the way would have been the strongest of any week throughout 2017. Last year, looking at the sectors in the S&P 500, the strongest sector was technology, up 38.8%. Every other sector in the S&P 500 was up, with the exception of energy and telecom, which were both down about 1% respectively. Last year turned out to also be one of the least volatile years in history. The S&P 500 only moved more than 1% in a day 8 times last year. We have to go back to the 1960s to find a period of time with that lack of volatility. In addition, we had very few corrections last year. The most drawdown was only 2.8% from its high last year, which was the second lowest in history, behind the 2.5% drawdown in 1995. We now have gone 390 trading days without at least a 5% correction, which is the second longest in history. If we go another 2 weeks, it will turn out to be the longest in history. In addition, last year, every single month was up. We've never had a calendar year where every single calendar month was up. We've had periods of time where 11 months were up, but never 12 in a row. And we look at the current economic expansion. While not the strongest in terms of growth, it is the third longest in history at 102 months. The other 2 longest are 1991 to 2002 at 120 months, and 1961 to 1969 at 106 months. So what will 2018 have in store for us? Well, stay tuned for further developments throughout the year. And if you have any questions or comments, please email me at david.presson@fbol.com, and thanks for tuning in.